All right, we are live. Looks like we're live. We're gonna wait a couple seconds to get things started, but Friday. What do we got? 10 minutes left to the close. We'll do some technicals before as we get because we are live. So we'll do some technicals before everybody jumps on. At the moment, we had the yen carry trade correction. Right, we're gonna talk about that yen carry trade and sort of what the BOJ did, the Bank of Japan trying to reverse it, trying to de-risk markets. We're going to go over that. So we do have that, rally into the previous level. We got to rally into um, previous support that I think is going to become resistance. Now, we still have a lot of room to the upside if the volume actually comes in. When we look at the RSI, we did overcool to the downside. It's time for a rebound, right? That's what we're waiting for. It is time for a rebound, but we might have had that rebound if we go back to the last correction, not the one in July. Oh, I still got the CNBC on. Hold on, one second. Let me turn this off. All right, cool. So, yeah, if we go back to last summer, and the reason I say that we might have another sharp correction, I think we have one more dip. Volatility is still elevated. We're going to jump to the VIX. We still have volatility elevated above 20, and 20 is the long-term average. So something to keep in mind. If 20 is a long-term average, anything above the VIX 20, which we don't know yet if we're going to bounce or not. We just don't know. If we do bounce above 20, the market isn't going back into its uptrend. It's going to stay choppy with big outsized moves to the upside, to the downside. Really good for traders, really good for volatility. If you're a vol trader, you like to sell premium. But the trend is not going to come back until we really drop 20 and then get below 15. And the question is, when are we going to see that? But I really want to emphasize here that volatility above 20 basically tells us the market does not have confidence. It's too much uncertainty. We have Jackson Hole on the 21st. You have NVIDIA on the 23rd. You have a presidential election, which is a little more, further ahead. You also have the Middle East. Is that going to escalate? Is it going to get hot? We don't know. So keep in mind, this is the level you want to see for the VIX. We're almost there. We're pretty much there this weekend, right? Can we stay above or can we get below 20 for the bulls? And it's not really bullish, bearish. It's just uncertainty and certainty. Below this level 20, I should just turn this a different color. Okay, I'm going to turn this. Let's go blue. All right. Once vol gets blue, and I told you guys, look, if the VIX stays above 20, it's going to get pretty nasty, right? It'll be good. You have big upside moves too. But the real question here is we're in a high vol, environment, a high volatility, very sensitive to economic data, very sensitive to comments by the Fed, very sensitive to anything that the Treasury might say, anything across the yen carry trade, right? We're very sensitive above 20. And the question is, do we get below 20? We'll see, because on Wednesday we have CPI, which we will go over those CPI numbers. But for now, let's go ahead and get on with the content. We have enough people here. The yen carry trade. This is what really spiked the VIX to 66. This 64, I believe. This was the highest measure, the third highest measure of all time. But it wasn't a financial crisis. It was more technical trading, right? Too much leverage, having to unravel. And now the VIX is back down. So the yen carry trade is unraveling. And we're going to go over what the BOJ said. The Bank of Japan. So, Japan gives out cheap debt. And let's switch over to that screen really quick. Japan basically just dishes out cheap debt. That's what they do. Okay. And this is pretty much, I don't want to click on it, but Bank of Japan walks back talks of rate cuts. This happened a couple days ago. The Bank of Japan basically said, look, we're not going to increase rates. Okay. We're not going to increase rates to calm down markets, because when they hiked rates, if you're not familiar with the yen carry trade, when they hiked rates, they increased the borrowing cost of a bunch of leverage. There's a bunch of leverage in Japanese yen. They increased the borrowing cost. And at the same time, they increased the debt because the Japanese yen went higher. So the debts that were borrowed in Japanese yen exploded. So a lot of people had to cover. It was a deleveraging event. Well, the Bank of Japan saying, hey, look, relax. We're not going to hike rates again. They also started buying back bonds, which reduces the rates in Japan. So they're trying to ease markets. And then Janet Yellen, the U.S. Treasury, also came out and said, hey, we're going to buy back U.S. bonds. Okay. So Nobody knows exactly how much leverage from the carry trade actually has been deleveraged. Maybe some people are still leveraged in there. We really don't know. We don't know how much has came out. The market is telling us it's not too worried. Probably the worst is over when it comes to Japanese carry trade. Okay, it's just over leveraged. It's just over leveraged markets. But that's not the end of it. We just don't know if there's more leverage or not. Okay, so there's a lot more confidence in the market now. Obviously, could be halfway through the unwind. That's what I'm thinking. I'm thinking we're about 50%. Yes, there you go. Yellen buying back bonds, QE 100%. So the US is buying back bonds, and that's good. I mean, TLT is down for the moment, but that's a little more complicated here. The first part I wanted to get by is, look, the VIX is coming off a ridiculous level. So the market is easing. It's gaining confidence as the VIX falls, but the market isn't going to lock in real confidence or real clarity until the VIX starts trading below 20. Okay. I don't think we're going to get there anytime soon. We have inflation. We could pop down there during next week. We have inflation. We have the Fed on the 21st, which we'll go over. You have NVIDIA earnings. You have too many things. You have the Middle East maybe heating up, maybe not. I saw there was a peace treaty trying to be put in place. We don't know. So keep track of the VIX. Is it going to close below 20 or not? And if it does even below 20, it can still bounce at 15. So the real clarity is below 15. I don't think we're near there, but we might get below 20, maybe not. This is your fear gauge right here. All right. So next part. Where are we at next? We also have so recession fears. A lot of people are worried about recession. We're going to go into recession, blah, blah, blah. And we're going to go over that data. Okay. You see the S&P has bounced pretty sharply because this was just a super unwind. I mean, this is just too much leverage, too much downside leverage. Everybody covered the shorts. And now we're heading into, okay, what about the recession fears? Shouldn't we be going into a bear market? Right now, the S&P is down. Let's measure this. I mean, at the most, we were down, what, 9? Is that 9? I can't even see that. I'm on the wrong street. 9%. So we're down about 5. Now, personally, I think the lows are in. Unless something changes, I think the lows are in for now. I do think we break back down. This was a pretty sharp move to the upside. Not as strong as I wanted to see on the R side, but this was a pretty sharp move to the upside. I don't think it lasts. Okay. Clear level right here. And these are our two levels. We're still in the lower level, right? The fear level. We're still trading in the fear level. If we get above on the S&P 5, and that looks different on the Qs, that's going to look different on SPX. But basically, we need to get out of the fear level in order to gain more confidence. Right now, we're trying to push, but we're not there yet. And the real fear for the market is, hey, is the Fed going to allow us to go into recession? Are they going to cut rates in time? Are we looking at an imminent recession? Okay, well, bonds, we're going to take a look here at bonds. Bonds explode. We'll get to this NVIDIA mark, okay? This is really where we know where we're headed past this red line. But hold on, let's get to the narrative here. So the bond market had a huge upside move. And some people are saying that, the yen carry trade, a lot of people just leverage into bonds so they could borrow more money. Because if you buy US treasuries, you can leverage up even more. It's a leverage instrument. It can be posted as collateral so that you can leverage more or at least reduce some of your debts. So I think bonds still go higher. TLT still goes higher. For now, let's kind of zoom out a little bit. It has broken that long-term trend. If the Fed starts to cut and the economy weakens, if the economy continues to weaken, bonds go higher. It's as simple as that. So bonds are telling us weaker economy, right? But the reason it didn't continue higher and the reason why the market is starting to bounce is not worried about it because there's a bunch of data that suggests growth is not actually imminently, it's a growth scare is what we're looking at, but growth is not as imminently bad as we thought. It's not that fearful. Okay. And some of the fear that people are pushing, I want to go to the triple B spreads. These are triple B spreads. I got it on the internals. Triple B spreads are, I know it's on here. Here we go. Triple B spreads right here. So triple B spreads, when they move higher, this is basically government debt. I'm sorry. These are people, investors piling into government debt and ditching corporate debt. When this thing goes higher, investors start to believe, they're believing that a lot of companies, a lot of corporations in the stock market are not going to be able to pay their debts, or they're going to be less probable to be able to service the debts that they borrowed because interest rates are too high. Now growth is rolling over. And if you lose revenue, you definitely can't pay back your debts that are already too high, right? So we have that spiking. Now it's not like it's not ridiculous levels, right? The banking crisis was much higher than that. I think the banking crisis was around here. So that was the peak. Yeah, banking crisis was, no, it was about right here. So we're not even close to the banking crisis levels. Not that crazy at the moment. Now let's go over that data. Let's go over that data because I don't think we're really looking at a recession here. Let me throw this over to you guys over here on TikTok. I'm going to try to get it clear. So yeah, you're hearing recession. First, let's go over GDP. Let's take a look at GDP here. Look, no, industrial production. You guys are more familiar with GDP though, so we'll start with this. So GDP, the last quarter went higher. Look, are we having a recession if GDP is climbing? Not really. It's backwards looking, of course, but the momentum, this is momentum growth. Momentum is now picking up from Q1. So January, February, March, very slow. Very slow. Now that momentum is picking up, we're at 1 point. We basically doubled our growth rate. Okay, we doubled the growth rate in Q2. What are we seeing going forward? Is the consumer slowing? Maybe a little bit, but industrial production is starting to pick up. Government spending is not going to slow. I'm telling you guys, I've been telling you the last year, we're going to get more fiscal spending, and the market's going to expect GDP to be higher in 2025 for whoever's elected. It doesn't matter if it's Kamala Harris or Donald Trump. They're both going to increase government spending to some capacity. And the question is it going to be productive or is it going to be non-productive? We don't know. Industrial production is one thing that the NBER, who actually determines recessions, this is what they look at. They look at industrial production. And we had a big upside move in industrial production. I think it's starting to turn up if we look at the long-term trend, right? So this doesn't spell recession. This is not recessionary. This is a re-acceleration in that sector. And part of it is the production of goods and big goods. I'll go over that, Jervine. But big goods are definitely there's more production of bigger things. People are, Home Depot is reporting that a lot of people are adding to their homes. Okay. Factories are going up. There's a lot more factory orders and construction builds happening in certain areas. So I don't think, we're not in a recession. We're kind of in this rolling weird place again, where it's like some things are negative and some things are positive. Unemployment, that's the key factor here. What people are going to, key on unemployment, right? So if you want to see these charts even better, just jump over to the YouTube stream. Unemployment came down. So if we're heading to such a deep recession, we wouldn't see, the early August jobless claims come down. We wouldn't see that. We wouldn't see jobless claims come down. Now they're coming down. And it doesn't mean they're going to come down forever, but they're not spiking. This is not, this is not an imminent recession. We're not there yet. Down the road, possibly. It's barely August, September, October, November. Towards the end of the year, I still think people are going to start picking up their spending. I think the dead zone is August and maybe a little bit in September. October, they start to spend again. But just keep your eye on jobless claims. As long as they don't spike, we're not looking at a recession here. This is why the market is picking back up. This is partly the reason why the S&P is starting to bid up, because growth isn't as bad as it, initially thought. It's just not as bad. We also had ISM services PMI pick up early in the week. I know some of you guys already saw this. We're back above the expansion zone. We're back above 50. Nothing to worry about there, right? So yeah, manufacturing is weak, but services are strong. Business activity hit 54, pretty good, versus 49 last month. Employment's back up to expansion territory, starting to expand. New orders expanding. Prices, not good. They're not spiking, but prices are still pretty high for services. So you're not getting a recession there. Non-farm payrolls. If these go to negative, we're in trouble, right? Because I know everybody's keen on unemployment rate, and this is, we're now triggering the SARM rule, 4.3% unemployment. All right. But a recession is going to be classified, or the acceleration by actual payrolls decelerating negative. We're still positive 114,000. Okay. We're still positive 114,000. So not a recession yet. The recession is not here. It's building if the Fed does nothing in September. So that's where we might be in trouble. But so far, not really. The unemployment rate climbing though is something that people are like, hey, you guys better cut in September. What are you doing? Right? Inflation, no, we're not getting to inflation yet. We're not going to get to inflation yet, but just remember the Bank of Japan is no longer, going to be hiking interest rates. The U.S. Treasury is starting to buy back bonds. It looks like the data for growth is not really, it's not plunging. It's pretty cool. It's still cooling, right? Our economy is still cooling. It's not plunging into recession. False narrative there. Triple B spreads are up, but it's not too bad. Okay. So that's what we got there. Let's take this off. We will get to this. We're going to get to the core inflation in a second because this is what the market is looking at. See what else we have here. Summer of economic projections, year-end 2025 medium estimates for unemployment is 4.2 for core PC inflation estimate. Yeah, we pretty much hit all the projections. We're already past 4.2, right? For unemployment, core PCE inflation estimate 2.3, the projection of property policy. Okay. I think the Fed's pretty much hit their target. So they're going to be forced to cut unless inflation ticks up. But these are some pretty good numbers also from the consensus. Okay, we want to look at the consensus. Last month we hit 3%. Market was excited about that. And we're expected to hit 2.9. So we definitely need 2.9. We need to hit the 2.9%. And we'd be breaking 3 for the first time since what, June or 2022? No, 2021. 2021, we'd be breaking 3% inflation for the first time in 3 years, right? 3.5 years almost. So that's going to be a big deal for the markets. That could get the S&P, making that push into the second, into that second level. Let's go SP. Yeah, let's go SPY. So if we hit inflation, I think we'll be good here. And then you're going to get the Fed step up. I would say there's a mild recession risk. That's what that data tells us. So the S&P is bidding back up. It's not too worried. Mild recession risks. If inflation is down, then what you're seeing is, cooling growth in some areas. Overall growth is still reaccelerating to some degree through the GDP. You're getting inflation still cool down. That's a sort of short-term Goldilocks scenario. But everybody knows the Fed needs to cut or increase liquidity to keep growth going, or else it's not going to happen, right? It's not going to happen. So I still think we got one more push lower. Maybe not a new low. I don't think we make a new low, but I think we push back in about 520. I'm going to say 520. I don't know if it's true. I don't know if it really happens, but I think we have one more push because there's a lot of fear in the market still. And we're watching jobless claims. Also, part of the jobless claims and unemployment came from the hurricanes, the hurricane in Florida, now the hurricane in Texas. And is it really widespread? Not necessarily. It's mostly, it's local. It's a local spread. So it's not like a widespread recession or, unemployment rate. The other part of it is all the immigration, right? Illegal or not, there's a lot of visas being passed out. So there's a bigger labor force, and that actually increases the unemployment rate. Because if you get a green card or you get a visa to work, but there's not a job for you yet, you sign up for unemployment. You don't need U.S. citizenship or Social Security to actually sign up for unemployment. That's just how it is. I'm going to go ahead and TikTok, just jump over to YouTube. I'm going to exit this. Jump over to the YouTube link in the description. Right? Okay. So the fears of recession are a little overblown. That's all we're getting at here. I think those fears are a little overblown, and it's time to determine, hey, is the bottom in? I think we need to come back one more time, right? The RSI tells us that I would be more biased to the upside, but I want to see what happens here. We did overcool. We're starting to pick up. We could have one more retracement. And if I go to not Wednesday, if I go to the weekly chart, we still have room to basically retest this middle band on the RSI. I still think we need to hit the middle band on the RSI. Okay, we don't need to. I'm sorry, we don't need to, but we might have one more push. One more push. Now, where does that come from? Where are we going to get that push from? I'm surprised less than 300K applicants for jobless claims in America. Is that correct? I don't know. I don't know what the exact numbers are, but I think it was, man, I'm not sure. Let me, where did they go? I'm not sure what they were, but they're not that crazy. They just weren't that bad. I mean, from my, my point of view, I see there's a lot of jobs out there. You just have to find them. I know that a lot of them are government jobs too. There's a lot of government educational jobs, but hey, jobs are jobs, right? It's better than no jobs. If you get you get a big recession, your jobs basically the economy has to contract, and nobody's going to hire, right? Some areas you'll still get some hiring. The NBER actually indicates a recession. There's nothing there. They're not really saying too much. Now, I did want to go over positioning so some of you guys can see how far we are down for the S&P. NASDAQ, I think, is a little more down, but check this out. Let's go to positioning right here, because this was sort of the warning that we talked about before we corrected. I said, hey, look, the market is pretty much fully positioned. Let's take a step back here, right? This is the NAAIM exposure index. It's like fund managers, basically active investors. These are active professional investors and how leveraged they are into markets. The lowest of lows was October 2023. That's the last time we've seen that. And I think we get something like this coming up. October is the bear market killer simply because, I mean, it's not too simple, but mutual funds, they do their tax loss harvesting in October at the very beginning. September 30th is their last day to sell, losers to get tax benefits. And so October, they start buying back, right? That benefits them. And so we might have some more room for deleveraging. That's why I don't think we're done yet. I think there's a little more room to deleverage just because there's too many uncertainties. And so we're looking to August 21st to see if the Fed does anything about it, if the Fed's gonna cut or not. All right. So not to wrap it up, but to go through it, VIX, we need to see the VIX below 20 to get more positive. The yen carry trades probably mostly unraveled. The BOJ is supporting markets. Recession fears are not as bad as we thought. Okay, services, ISM, GDP, jobless claims, not as bad as we thought. Triple B spreads are going up, not too bad. There's still a lot of AI capex. So Amazon, Apple, Meta, Microsoft, they're all spending hundreds of billions into AI infrastructure. So utilities, copper, right? Utilities, coppers. There's probably some other little tech companies I don't even know about. There's so many companies out there. Blockchain is still legit. Okay, blockchain is still going to be legit on this cycle because it's kind of an asymmetric trade. Now it is a risk trade. It's waiting for liquidity from the Fed, which will go over the RRP. But right now we're waiting for this. I think the best time to get long again is to wait for the survey comes out every Wednesday. Just the positioning comes out every Wednesday. So once it really starts to unravel down here, I think the lows are in. I just don't think we're there yet. Okay, and this is mostly for S&P, not necessarily small caps or crypto, but it is somewhat a sentiment indicator. Okay. Yeah, there you go, Jervine. We're basically at those levels already. You said you're surprised. I thought way more. I don't think that the economy is as bad as people are saying. The inflation part of it is what pisses people off. But another thing people don't realize is when prices go higher, that also is the GDP and the economy expanding. Right? The input costs for companies are going to go up over time, no matter what. Maybe a couple little inputs here are lower, but if you're a tech company, your inputs might be lower. But for most manufacturing and industrial companies, they're not going to be lower because the price of things just go up over time. Somebody's got to make money. All right, I'm going to take this one off. There we go. So, we're not at peak. We're not at peak, and I would keep mind on this exposure index when it gets up to this 100 level. Just look for a pullback, right? And you can couple this with an RSI overbought. You get the RSI overbought. Yeah, remove. You get the RSI overbought and you get positioning fully invested. there's probably going to be a correction of 2 to 10%. We don't know what it's going to be, but it seems to happen every single time. The timing is not day to day because it's a weekly. I mean, it's a weekly indicator, but at least we kind of know. All right, we're at the top here. Is there anything else important on here? Credit spreads. Yeah, credit spreads are blowing up a little bit. They're not blowing up. They're just up. Margin debt, right? We want to keep an eye on margin debt. This thing lags a lot though. June. So we'll see what this looks like later. A lot of margin in there. CNN, fear and greed. I think fear is starting to pick up. Oh, come on. Not going to load on me? That's all right. We're moving on anyway. Okay. So AI CapEx still here. NVIDIA is what we're looking for, August 23rd. We could just have something where we come down one more time. Now, my guess is the more the market stays at this very lower level near the low, the more we anchor towards the lows going into NVIDIA earnings, the better. Because that lowers valuations. We know NVIDIA is going to have ridiculous revenue and ridiculous profits. The question is, what is their guidance going forward? It's probably going to be big because of Meta, right? Meta very vocal on earnings call about how it's going to take several years. This is Jervine. It's going to take several years. I can't even talk. Several years before they make back all the money they've been spending on AI infrastructure, right? So that tells us NVIDIA is going to have a monster earnings report. I think the market really starts to shift somewhere around NVIDIA earnings late August, because also we're going to have Powell come out and he's probably going to throw up the rate cut. August 21st, Jackson Hole. That's the big meeting where all the Fed members meet up. My guess is they throw up the rate cut. They did this last time before the pause. I remember last year during Jackson Hole, everybody basically said, hey, it's time to pause. It's time to pause. They said it in 1,000 different words. They talked for like 3 or 4 days, and they basically all said, hey, we're about to pause. So don't worry. I'm going to clip it. I'm going to clip a bunch of clips of the Feds talking, and we're going to interpret, hey, the pause is coming. I think not the pause is coming. This time the cut is coming. I think the cut is coming. As long as inflation hits the target, the expectation on next Wednesday, the cuts are coming. The question is, where's the market going to be? I'd rather see the market a little lower, because that tells me we're pretty much pricing in the worst case scenario to have more confidence that we move higher. If it moves higher too quick, if we really bid higher into this trend level, right, like really quick, we're probably coming back down. I don't think we're just going to break out. We're probably coming back down. Okay. So I'd rather us come lower first, because that rip higher is going to be very profitable versus chasing this. It's going to make you a little nervous, right? So who cares what I hope for, but I'm watching the VIX. I just know this. If the VIX gets below 20 at some point, I want to see where's the price action at. If it gets below 15, that's where I'm like, okay, I got to get long. I got to get long regardless. But if we spike to like 26, 28 next week, it's probably going to be a buying opportunity. I think the VIX has one more upside move, right? I think the VIX takes one more move. Who knows where it goes? Maybe it gets stuck here around this 28 level. This is the standard deviation. It goes 20, 28, what is it? 34, 36. Yeah, 36. It's like an exponential risk. Every $8 in the VIX is like an exponential move of risk. I don't know exactly how to explain it. I just heard some volatility people explain it. And so that's what we're looking for. We're looking for one. If you're looking for the lows, maybe one more spike on the VIX to like 28, somewhere around 28, 26. And if it can't get above it and nothing is too crazy, I think we're going higher. I think that's it. Oh, AI. Yeah. Are you still bullish on Palantir? Broke 30. I'm always going to be bullish on Palantir, but I'm not bullish on, oops, it's not Palantir, is it? No. I'm bullish on, oh, that is Palantir. Am I tripping? Oh my goodness. That's right. That was the dip. What a move, huh? Yen carry trade up 42% after earnings. Okay. Yeah. I mean, it can have a pretty big move. It depends where you're at in your portfolio. It depends what you're trying to do. If you're holding Palantir, I would not change anything. I wouldn't take anything off. If you're just holding it, You don't want to take anything off. If you're just entering, if you want to chase it, I wouldn't chase it. I wouldn't chase it until we see the daily RSI come back to maybe the middle, the middle or the lower, which is going to take some time. You just don't want to get caught, right? You just don't want to get caught. Usually when you get these big moves, it does consolidate for a while. Big move might go higher and then consolidate. If it does break out, I think at the highest maybe goes to about 33, 34 before it comes back down. But I have no clue. I think it's up too much to try to chase it. But I'll show you what I would chase. I think we hit just about everything. Nvidia, CPI, yeah, we got a lot of stuff here. I like bonds though. I think because the Fed's going to cut, and some people are saying, oh, well, bonds will go down. Bonds look good. They finally retraced for us. We got a bond retracement. As long as inflation comes down, so bonds are so simple because, and this is a TLT, they have two different catalysts, inflation and growth. That's it. Inflation and growth. If inflation ticks lower, bonds go up. If growth ticks lower, bonds go up. If you get growth and inflation tick lower, bonds go up, right? Where it gets tricky is if growth is still accelerating, but inflation's down, bonds probably still go up because you're still earning a lot on the yield, but they don't go up as fast as if growth was coming down too, if that makes sense. If inflation's up and growth is down, bonds go down. So bonds are a little more concerned with inflation risks, right, than they are growth risks. So I would say that bond market definitely has more upside, has a lot more upside, and a lot of other countries. I know Janet Yellen and the U.S. Treasury is trying to create incentives to get this. I mean, look at this technical setup. You could probably get a move to 120 by the end of the year. Probably get to move to 120 by the end of the year. Is that too much to ask for? Maybe it is. Maybe it is. Let's see if we, let's say, see where we could go if we make a big move. Yeah, I think we could hit 120 by the end of the year or October maybe. Okay. So bonds want to see growth. So if you need a hedge for like if the recession starts to take off and small caps get smoked, right? If the Fed doesn't cut, so let's say the Fed doesn't cut. If the Fed doesn't cut, and the Fed in September, and they allow bonds to, or I'm sorry, they allow the economy to unravel a little more, bonds are going up. Inflation's coming down, bonds are going up. So this is a good hedge for a growth scare. And that tells you right there, that red bar, that, okay, growth is not as, the recession is not as bad. The imminent recession is not as bad as we thought. It's exactly what that tells us. So Palantir, I'm still bullish on. Like I said, you just want to wait for consolidation and a pullback. AMD right on target. Of course, this is like a 2018 trend. This is a very long-term trend for AMD. You almost never really come back into that trend, but if it does, I mean, I think you have to be long AMD because chips are so oversold right now. Nvidia is so oversold. Yeah, they're oversold. They are pretty oversold. And you don't want to be short. You want to play this out to October, end of September. I think we have a bounce for sure, but we could, start to consolidate. AMD's tricky. And then by the mid-October, I think AMD turns up. I think it really turns up. There could be some mutual funds who are tax loss harvesting and saying, look, let's stay out of chips until Nvidia reports, or stay out of chips until the chip cycle starts to refresh, whatever that means. I've heard that 1,000 times. Amazon solid. The price action is never that pretty on Amazon, but I think it's pretty solid for you go into the Santa Claus rally where people start buying a lot of stuff for the holidays. I think Amazon's going to benefit the most. AWS is really good. Now they get to show off their new AI. So Amazon fundamentally pretty strong here. Celsius, be careful. I know Celsius has been dipping, but I'd be careful because there's a lot of TikToks and There's a lot of spread on social media that says Celsiuses are bad and they're gonna mess up your kidneys. Probably true. Probably is true, but it's spreading. So, their earnings power is coming down. Their pricing power is coming down. They're probably gonna have to lower prices a bit. They got smashed based on that. And who knows if their actual revenue comes down. Eventually it's gonna bounce, but I would be careful. I'd be careful, especially with the consumer starting to slow. You really need the Fed to cut rates to get this thing accelerated again. Caterpillar, I think Caterpillar, excuse me. I think Caterpillar is going to be solid. I still like Caterpillar industrial. This is a play on industrial production. It's kind of taking a while to gain momentum here. And I think it's up too much. I think you want to pull back. Not up too much, but too quickly, right? Right after earnings, and then you have this push. It is starting to pull. It is trying to break out, but I want to see it consolidate sideways a bit, not just rushing and chase it. I wouldn't go rushing and chasing it. Now, this company, I'm telling you right now, I think they're going to crush earnings. I think they're definitely going to crush earnings. Thoughts on Intel, major job cuts. Intel and CrowdStrike look very similar. See, CrowdStrike tried to recover. That was nasty, man. What a recovery here. 201. I should have sold some puts. And then Intel, INTC, dumpster fire. Intel will kick back at some point. It'll kick back up. I mean, when you cut that many jobs, you're basically increasing your margins to some degree. So it's probably undervalued. I don't want to own it. Is it going to be a nice trade? Is it going to be a nice investment? I wouldn't invest in it either. It's possible to trade it, to try to fill the gap or at least get back up to 22. This thing's getting murked. See what it looks like on the weekly chart. Something that gets dropped this hard though. Oh yeah, that thing is extremely oversold. It probably priced in the worst. I'm sure it priced in the worst at this point. There's still a lot of government spending that Intel is receiving here in Arizona. So it's probably some short-term or mid-term stuff they got to take care of. They got issues with. I'm not an expert on chips, but that type of price action tells you that it's either something's worse down the road, which I don't think so. There's still a demand for the whole semiconductor space. There's still a lot of demand there. So I think more than anything, it just priced in everything that could go wrong. I wouldn't buy it though. Not yet. I wouldn't buy it yet. Stock's down major. Yep. But it's oversold. If you do trade options, you could just sell puts like way down here at like 15 and probably low risk trade. But if you try to get long here calls, it probably moves sideways for a couple weeks, drains you on theta. So I would sell premium on this. I would try to sell premium on it. I wouldn't try to get long. You could do some shares. Yeah, you could go in shares, but don't expect it to go back to all-time highs. If anything, it could probably go back to 30. But I don't expect to go back to all-time highs. Chipotle finally starting to bounce here. Let's go to that daily chart. So I like Chipotle. Is Chipotle going to suffer recession fears? People really like Chipotle, right? They really like, especially with travel. They're probably going to pick up volumes again. They broke out of the trend. I would look for just some consolidation around here. I think Chipotle looks good. What else we got? CEG, Constellation Brands, copper. So if you're looking to get long copper, just from all the AI infrastructure and the commodity is oversold, China is stockpiling so much copper. Who knows what they're going to do, but they have a lot of copper. So there's not a whole lot of supply of copper right now. These are just some plays I've been looking at. Home Depot, people are starting to come back in. Now that rates are down, it doesn't look like they're going back up again. I mean, like really high. Rates are down. Home Depot probably benefits from this. Home Depot, whatever this is, builder. There is some home builders. I thought I added them on here. I guess I didn't. But I mean, if you want to get the ETF, ITB, I think it's Lennar and DR Horton. Those two look pretty solid at the moment. Lennar and DR Horton. Let's go to that real estate really quick. There it is, Lennar. It is making higher, it's making higher highs, higher lows. Probably want to see it hold this level on a pullback. If you're looking to go long, wait for another pullback in the overall market. Wait for the VIX to really get overextended one more time before you think about getting long with size. If you're swing trading, if you're day trading, it's irrelevant. If you're day trading, that's a whole nother game. If you're position trading over the next 3 to 4 months, I think crypto is the best position trade at the moment, especially with the sell-off and the depleting supply and the increasing demand for crypto. DHI, this is DR Horton. They look pretty much the same. So, and this is if you get not Redfin, if you get rate cuts. If you do get rate cuts. Any industrial, is it Union Pacific? ETN. Somebody was talking about ETN, Eaton Corporation. This is industrial. They produce electrical products. So bottom of the supply chain. I mean, the RSI looks really good here. Really starting to curl up, really starting to pick up. This might be a good play. And also when it comes to earnings, the industrial sector, this is the industrial sector. The industrial sector is like lagging the most, meaning they have some of the best earnings versus the stock price. So I might have to add this actually. ETN and Caterpillar. That might be a good one. Okay, they're almost at all-time highs here. Automated data processing. Okay, let's go ahead and jump to crypto though. All right, Bitcoin. Hopefully that was a low. I think that's it. That was a big capitulative low. I think we've put in the lows for crypto. Okay, I know we say that every time. This might be the low. We were trading in that range, but we finally got a nasty break to the downside from the yen carry trade, right? How much Bitcoin was wrapped up in leverage from, that yen leveraging, whatever you want to call it, yen financing your trades. That leverage is out. So Bitcoin got down to about 49. Big reset. You have the daily RSI reset. What is the weekly? We might have touched on the weekly. We did touch the middle on the weekly. And it looks like some bullish divergence. If you look really slightly, you can see that Bitcoin is showing some bullish divergence. Where is it? There it is. A little bit of bullish divergence, right? The RSI is holding higher. So there was more, negative pressure over here. So this is bullish. Crypto's starting to pick up here. And, the Fed on the 21st is going to accelerate that trend. So I think we pretty much reset. Let's go to Ethereum. Ethereum's still pointing lower. Wow, very different chart for Ethereum. Better risk reward probably for Ethereum. Chainlink got absolutely murdered down to $8. Makes me wish I would have sold some up here, bought some more down here. I'll still be buying this. The thesis is real world assets are at $3 billion right now. They all use Chainlink is the leader in that industry. Okay. For real world assets, expected to be at 17 trillion by 2030. I think it's just a very it's hard to understand. So still bullish on Chainlink. It's going to sound like, oh, this guy's crazy, but I think it's the most underpriced crypto right now by far. I think it's the most underpriced. Sol's pretty strong. Bull flag on Bitcoin Weekly. Yep. Sol looks better than ETH. I know Sol's look so good. I don't even look at Sol. I'm so pissed. I'm like, come on. Come on. Why do we have to have Sol outperforming Chainlink, right? But yeah, Sol looks good. I mean, if there was if there were anything that looked like a crypto bull market, it would be Solana. I have to say Solana is probably the most bullish coin. It's probably the most bullish coin. It is probably the most bullish coin. The only issue with Solana, like I've said before, crypto is a very. You guys remember Terra Luna? Terra Luna was up there. It was in the top 5, and then boom, destroyed. Just destroyed. Solana, a lot of their network is a bunch of meme coins. I don't think Solana doesn't actually bring solid value to the marketplace. I don't think they really bring a whole lot of solid value, like real value, real projects. I think Ethereum will still outpace it. Now, as a trade in this cycle, yeah, Solana looks absolutely beautiful. I'm jealous. I don't own any Solana. I'm jealous. It looks beautiful. So congratulations if you held your Solana. Sol looks better than ETH. Got to get Solana ecosystem plays. Juniper, Pyth, Sunglass, staked Solana, Jito. Yeah, I mean, I don't know about all that stuff. You guys probably know more than I do. I just know Solana looks good. I just don't like betting on those coins because you have to watch them. When they pop, you got to decide whether to hold them or not. A lot of these coins go to nothing. They don't come back. I know GRT is struggling. The graph is struggling a bit. So these coins get hot, and then once you get a Bitcoin collapse, some of them never go back up again. They really struggle. You got to set alerts. Yeah, you're right. You got to set alerts. If you have the time, great. Some people don't have the time, and for me, I just don't want to get caught because I'd rather be big in crypto, my style, and I want to be big in something I'm sure is going to be used. Covalent instead of graph. What is the ticker for that? Settlement over. Look at XRP chart. Oh man. Yeah, this is a prime example. XRP never, I mean, this is what a lot of coins will do. It'll just be the shills who buy it. And not much going on there. Oh, they recently changed the ticker. Okay. I think the graph is ahead though, Doifer. As far as I understand, the graph still has better fundamentals. Like they have the most usage, they're indexing the most data. I think they're still the lead. Now, again, the lead doesn't always mean it performs better. It's just a safer bet, right? As far as I know, I could be wrong. That's just as far as I know. I think the graph still has better fundamentals. Okay, CXT, USDT. Dang, these tickers are so long. It's like a social security. Oops. Dang, it was up 30. That must be a small cap. It must be what, like 500 million? Got to put in a damn social security number just to get this damn ticker. Sheesh. Okay. I mean, what is this? What is this? See, I don't. What a monster. I mean, it is a monster, up 84%. But I don't trust these. I just don't trust this price action. It looks frothy to me. I would get in a little bit. I mean, don't get me wrong. If you watch it, you understand it. But for the average person, and I've been there, SNX, Synthetics coin, Aave, all these coins back in 2021 that looked great, sounded great, and they never get close to coming back to all-time highs. They have this big push at the beginning, and that could be the graph, and they never come back. So good luck to you, my friend. Good luck. Hope it goes higher. Yeah, this is one of them. SNX. I remember this thing. Oh man, I have it. In the last cycle, Synthetics went to 26 bucks. 26, and I thought, okay, it's gonna break out right here. Nope. I mean, it went from 26 to 14 to 7. It's at $1. Down 90%. So it probably never comes back. It's just a lot of excitement in these early coins, and they don't get a whole lot of development. There's unlimited. Yeah, Doifer, I hear you. There's just all I'm saying is there's so much information for crypto. There's so many things you can say that doesn't justify, right? So many things you can say that could go wrong. There's a lot of things that could go wrong because nobody really understands. You can say, "Oh, it has this and it has this and it has this." But who's using them, right? Where's the real use case? It's this a layer 2 blah blah blah. That's my issue with it. Again, I'm not saying I hope it doesn't go up, but for people who don't know any better, they just don't know any better. A lot of these things get crushed. Right? And all that, creating a way back machine for layer 2s, Ethereum indexer, search history, blah blah blah. There's a lot of blah 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 in the crypto market that means nothing. That's all I'm saying. A lot of it means nothing. I've been there. A lot of it means nothing. That's why coins, you see them go from the top 10 to the top 20 to the top 50, then they disappear. You got to know what you hold for sure. You got to know what you hold. So if you don't understand a coin, don't just hold it. Make sure you understand it. Main takeaway. That's it. Make sure you understand it. Don't get caught up in the hype. Understand when the coin in the project is making progress, right? Not just a bunch of hype words. You got to make sure it's making progress. How do you know that? Because we're not computer technicians. We're not computer engineers. So you got to do your research. You can't just listen to it. And it's hard to do research in crypto. What the hell? You can't even read the language. Cryptography is ridiculous. How do you know? Anybody could say some, when computers first came out, you could say anything. Look at Intel. All these chip companies, we really don't understand it. We just see the price go up. A lot of the times, we don't understand it to a T. We see the price go up. Whereas versus Chainlink in general, Chainlink is being used by the biggest financial institutions. That gives me a lot more confidence, right? Fidelity is using it. ARK is using it. Google is using it. Amazon's using it. The banks are using it. The actual banks are using Chainlink. They have partnerships with the most wide. So I'm just more confident that way because crypto, it could end you. It can absolutely end you if you get too big. Stay small. Know what you're in. Unless you're in Bitcoin, you can get big in Bitcoin on the pullbacks, on the giant pullbacks. So just don't want to, there's a lot of crap out there. But if you know what you're in, you're good. I think jump trading is the reason why we've seen a lot of ETH selling, big crypto fund exiting crypto space and sold a bunch of holdings. Oh yeah. Yep. A lot of people got caught offside on that leverage break. I think that's what it was. A lot of the leverage just broke. So, yeah, but either way, we know Bitcoin is Bitcoin's the daddy wave. So we're waiting for Bitcoin to make another move, and we'll see. We'll keep an eye on the Bitcoin dominance. It's surging at the moment. When Bitcoin dominance finally breaks lower, altcoin season will come. We didn't have a summer. We didn't have altcoin summer. Maybe at the end of August. It didn't happen this year. You just never know. Things don't always play out the way you expect. But we do know once we see Bitcoin dominance sort of peak out, it's probably near the peak. Maybe a couple more months, altcoins start to come into play. And altcoins do have the biggest move out of all markets. Some of them are already moving, but those are like super altcoins. They're like 10 million market cap, 30 million market cap. That's so tiny. So tiny. Okay, so well, anyways, when it comes to macro in general, we'll look at the dollar and oil and stuff. When it comes to macro in general, I want to hear a little bit like, what problems are you guys trying to solve here? Are we trying to find the bottom? Is that what it is? Where's the bottom? Is that what people want to know? Where is the possible bottom? Is the Fed going to cut rates? What are the issues or the problems that we're trying to solve using macro? What are the issues that we're trying to solve here? Another big thing is the dollar. I know we said, hey, when the dollar rips, we're going to see crypto rip. Didn't happen. Usually that's the case. Just didn't happen. But everything is tied to the dollar. The whole financial system's tied to the dollar. So when we get this secular breakdown on the dollar, let's see where it's at. Once this monthly RSI, we're looking pretty far back, but once we get the monthly RSI really tank, I think we're getting close. That's a sign of dollar debasement, dollar currency debasement, and we'll probably already know it. You know, the dollar's probably trying to price in Fed rate cuts, which devalues the dollar, and more liquidity. Oh, that's what I wanted to get to. More liquidity here because the reverse repo facility is almost turning negative. Zero is right here. If this liquidity runs out, this is the money that's basically chasing all the US Treasury issuance. The US Treasury, supply and demand. If you increase supply with a constant demand, prices go lower. And they're increasing the supply of bonds on the market, which pushes the prices of bonds lower, which automatically, mechanically pushes rates higher. Therefore, if this money runs out, there's not going to be a buyer of bonds. And if there's no buyer of bonds, bonds go lower or sideways, rates go higher or don't move at all. So I'm thinking we're getting very close to the Fed needing to, increase liquidity again. Right? So we're looking for that global liquidity to pick up. This is really what's going to get altcoins going anyway. This is the big trade we've been waiting for 3 years, is the liquidity trade, right? Collateral trade, when that collateral comes back. So we're getting tight here. You're getting a lot of global rate cuts in the market. Japan is no longer hiking rates. And if we do momentum is starting to pick up. This is global liquidity momentum. Looks like it's bottomed a while back. So the pressure for money, and the way this works is the more liquidity comes into the market, it's going into the financial system. It debases the dollar. Automatically, asset prices move higher, not from volumes, but from they're priced, what they're priced in falls and they go up. It's a weird concept. It's like taking a pie and you have 10 pieces in the pie, and all of a sudden you create more pieces of the pie. If you create more pieces of the pie, each piece of the pie reduces in value, right? It reduces in value. Even though you didn't change the whole pie, they reduces in value. That's what happens to the dollar. And the opposite side of that is asset prices now become a bigger part of the pie. They become a bigger part of the pie, and it's reflected in the price. Very weird concept. The pie thing is the only thing I could think of how to explain it. But almost done with the macro course, the first part of the course. It's going to be really good when it comes out. You guys be ready if you guys are interested, but it's going to be good. Clear a lot of stuff up. All right, let's wrap it up. Let's go ahead and wrap it up. So we got the VIX here. Just keep an eye on the VIX. I mean, it went into ridiculous territory. It really shouldn't go back to the highs here. If anything, it probably tries to retest 28. That's my guess. Over the next couple of weeks, it probably tries to retest 28. Look out for an acceleration in war. A lot of times war doesn't mean a fundamental change in the stock market unless we see oil prices start to spike. That's the only bad part. We don't want to see oil spike. Other than that, if it gets below 20, now we're more optimistic about the market returning back to all-time highs. And by then, we'll know if we get to 15. We're just not there yet. Small caps look very attractive if the Fed cuts rates. My guess is August 21st when the Fed comes out and I guess this is the monthly chart. When the Fed does come out August 21st and at Jackson Hole, we're probably going to see small caps get volatile. Volatility is going to pick up. The market wants to hear, are you going to pitch the rate cut or not? Right? Are you going to pitch the rate cut or not? CPI next week, 2.9. We should see the dollar drop. Okay. If it comes in line, we should see the dollar drop. We should see the VIX probably drop too. And we should see rates dropped a lot. So maybe they just stick. Maybe they do fall. But we should see all this stuff ease, financial conditions, if inflation comes out on target or lower, because that's more fuel for the Fed to cut rates. I think we've hit about everything. Anyways, you guys stay blessed over the weekend. Lift weights, get strong, eat healthy, live as long as you can. I also figured out that pickleball or racket sports help you to live the longest. Stimulates your cerebellum and you live the longest. So maybe you want to start picking up some pickleball, lift some weights, get that testosterone up, stay fit, stay healthy, play some pickleball, make some money in the market. We'll catch you guys next time. Stay blessed. Thank you again.